If you have ever looked at photos, salaries, rent, vacation days, and healthcare stories online and thought, wait, which place is actually better to live, America or Europe, this is for you. We are going to compare real life, not fantasy, using public data and everyday trade-offs, so you can leave with a clearer answer for your own goals, budget, family, and future. The first honest thing to say is that this question is already a trap if we ask it the lazy way. America is not one place. Europe is definitely not one place. Comparing a high-cost American coastal city to a smaller city in southern Europe is not the same as comparing a mid-sized American metro to northern Europe, and it is not the same as comparing rural life in either region. The real answer depends on what you mean by better. Better for making more money fast is not always better for raising kids, and better for free time is not always better for career speed. That is why people argue past each other. They are not really debating the same thing. So let us do this the honest way and treat it like a countdown of the biggest life trade-offs people actually feel. By the end, you should be able to answer the question for yourself without copying someone else's lifestyle or politics. The goal is not to crown one side. The goal is to make the trade-offs visible. Let us start with the part everybody notices first, because it is the loudest in public debate: income. America often looks stronger on headline earnings, especially for skilled work, management, tech, medicine, finance, and sales. On a widely used international comparison benchmark for household disposable income after taxes and transfers, the United States sits very high, with a figure above many European countries. The same benchmark shows large differences across Europe itself, with countries like Germany and France higher than the benchmark average, while countries like Spain and Italy can be lower. And some small high-income countries even exceed many others. In plain English, Europe contains both very rich and more modest income environments, and average pay alone can make America look unbeatable in some comparisons. But here is the part people miss when they stop at paychecks. High income and high living standard are related, but they are not the same thing. The reason is simple. What you must buy privately matters just as much as what you earn. If two people make very different salaries, but one of them has more public support for health, transport, leave, education, or childcare, the gap in real day-to-day stress can shrink fast. This is one reason online comparisons can feel confusing. People compare gross salary with total lived cost and call it a fair fight. It is not. Now the second big trade-off, taxes, because this is where a lot of myths are born. The common story is that America is low tax and Europe is high tax, end of discussion. That is too simple. On one major measure called the tax wedge for an average single worker, the latest country note for the United States reports a rate a little above 30%, while the latest average across the developed country group tracked in that report is higher, in the mid-30s. That means America is lower on this measure than the group average, but not no tax, and definitely not low friction when you include state and local taxes, payroll taxes, and the many costs that show up outside taxes. This is where the honest comparison gets interesting. In much of Europe, you may pay more through taxes and social contributions, but a larger share of essential services is bundled into the system. In America, the sticker tax rate can look better, but the unbundled costs can hit later and in chunks. Insurance premiums, deductibles, co-pays, childcare, tuition, transport, and all the little service charges and add-ons that are legal, normal, and easy to underestimate. People fight over which system is better when the real question is what kind of bill you would rather pay, predictable and public or flexible, but often private and fragmented. That leads to the third comparison, and this one changes how life feels every week. Time, not just money, time. A lot of Americans earn well and still feel squeezed because the system asks for constant management. Compare plans, call offices, follow billing, drive longer, shop around, track subscriptions, watch deadlines. In many European countries, life can feel slower not because people are lazy, but because some parts of life require fewer separate transactions and fewer emergency decisions. There is hard policy behind that feeling. The United States has no federal law requiring paid vacation for private sector workers. At the same time, European Union rules require member states to guarantee at least 4 weeks of paid annual leave. And the broader working time rules also include limits and rest protections. That does not mean every job in Europe is relaxed. It does mean the legal floor is different, and floors matter more than people think because they change what is normal to expect. Official labor data in the United States also shows how uneven paid leave access can be depending on job type and pay level. In the latest employee benefits release, civilian workers overall had strong access rates for several paid leave categories, but when you look closer, full-time workers and higher-wage workers are far more protected than part-time and lower-wage workers. In private industry, access to paid vacation is much lower for part-time workers than full-time workers, and the wage-based gaps are huge. That is the quiet part of the America debate. The top half and bottom half often live under very different benefit systems even in the same city. Europe is not magic here either. Plenty of Europeans work hard, face understaffing, or deal with long commutes. But official European data still shows average actual weekly hours across employed people in the Union at about 36 hours in the latest release, and that lines up with the broader pattern that work-life protections are stronger on average than in the United States. Again, averages hide country differences, but the direction is real. The fourth comparison is healthcare, and this is probably the biggest emotional divider because it is not just about comfort, it is about fear. In America, the upside is world-class hospitals, advanced specialists, faster access in some private networks, and extraordinary care if you have strong insurance, money, or both. The downside is cost exposure and complexity. The latest national health spending release showed U.S. health spending at nearly $5 trillion and about 17.6% of the economy in the most recent full year reported. That is a massive share. Spending that much does not automatically mean people feel secure. A lot of Americans do not experience healthcare as a service first. They experience it as a financial risk management problem. What network is this doctor in? Is this test covered? Is this bill correct? Will this claim be denied? Do I delay care? Can I afford the deductible right now? That is a very different daily psychology from systems where coverage is more automatic, even when those systems have their own problems like wait times, staffing strain, or limits on some choices. And outcomes matter too. In the latest provisional U.S. figures, life expectancy rose to about 79 years, which is an improvement. In the European Union, life expectancy at birth in the latest reported year was above 81 years. Life expectancy is not a perfect scorecard for healthcare because it also reflects violence, obesity, addiction, road safety, inequality, and many other factors. But it is still one of the clearest ways to say this. America spends more and can deliver incredible care, yet many European systems deliver a stronger average baseline outcome. This is where the better than Europe argument often splits by income class. A higher income American with excellent benefits may say America is clearly better because the care is fast, specialized, and high quality. A lower income or unstable income American may say Europe is clearly better because not getting sick should not feel like a budgeting crisis. Both people can be telling the truth. The fifth comparison is financial shock resistance, which sounds technical but feels very personal. Can your life absorb a surprise without falling apart? Public data on this tells a blunt story on both sides. In the European Union, a recent quality of life indicator showed that about 3 in 10 people said they could not cope with unexpected financial expenses. That is not a small problem, and it is a reminder that Europe is not a stress-free continent. In the United States, the Federal Reserve's household well-being data shows that a little under 2/3 of adults said they could cover a hypothetical $400 emergency expense using cash or its equivalent, while the rest would need to borrow, sell something, or would not be able to pay right away. The same release notes that a meaningful share said they would not be able to pay by any means. That is a huge reality check for anyone who thinks American incomes automatically mean financial comfort. What this means in real life is that the argument is not only who earns more, it is also who gets fewer catastrophic surprises and who can survive a bad month. That is why two people with similar annual incomes can have opposite answers to the America versus Europe question. One person is comparing upside, the other is comparing fragility. Now the sixth comparison, and this one is where social media posts can be very misleading. Housing. America often wins on space, especially outside expensive coastal cores. Many people move to the United States and feel the difference immediately in home size, storage, parking, and the chance of having more square footage for the price, depending on the metro area. That is real, and people should say it more clearly. Space changes daily stress. It changes noise, privacy, family routines, and even how often people go outside. But space is not the same thing as affordability. In the United States, recent census data reported that over 21 million renter households were cost-burdened in the most recent reported year, representing nearly half of renter households for whom rent burden is calculated. The same release noted a median renter housing cost ratio that stayed high. In plain language, a lot of Americans have more space than many Europeans, but a lot of renters are still stretched hard to keep it. Europe has its own housing pain, and it is serious. Official European housing data points to overcrowding and high-cost stress in many places, especially in some cities and specific countries. One recent summary reports that a notable share of people in the European Union live in overcrowded households with very large country differences. That means Europe can offer strong public services and still leave people squeezed in their homes. So if someone says, Europe is better because housing is humane, the honest answer is, depends where. If someone says, America is better because homes are bigger, the honest answer is, depends what share of your income and commute time you pay for that space. Here is a detail people miss in these debates. Housing is not just a monthly payment. It is a bundle with transport. A cheaper home far from work may be more expensive once you count fuel, car payments, repairs, time, parking, tolls, and the mental cost of long driving. A smaller apartment near transit may be expensive on paper, but cheaper in total life management. This is one reason people move between America and Europe and come away with opposite conclusions even at similar incomes. They are buying different bundles, not just different apartments. That takes us to the seventh comparison: transportation and daily movement. America is incredible for road mobility, regional travel by car, and the freedom that comes with space and parking in many places. If your ideal life includes a larger home, flexible driving, and access to big-box shopping, outdoor space, and long-distance road trips, many parts of America feel built for you. It can be efficient in a very practical way. But the trade-off is dependency. In a lot of US metros, driving is not a choice. It is the only viable system for ordinary life. That means teenagers, older adults, people with disabilities, and people with low incomes can face real barriers if they cannot drive or cannot maintain a reliable car. In many European cities, even where housing is tight and pay is lower, basic movement is often easier without owning a car. That changes household budgets, independence, and social life more than people expect. This is one of those uncomfortable truths that both sides miss. Americans sometimes underestimate how expensive car dependency is because the cost is split across many bills. Europeans sometimes underestimate how much space and flexibility car-centered living can provide when roads and parking are available and jobs are spread out. Better depends on whether you value independence from a car or independence through a car. The eighth comparison is education and career launch, and this one matters a lot if you are young or raising children. America can be a rocket ship for career acceleration, especially if you enter high-paying sectors or start a business in the right environment. The labor market can reward speed, ambition, specialization, and relocation in powerful ways. Pay jumps can be bigger, promotions can move faster, switching jobs can produce real income gains. But the cost of the launch can also be much heavier. The latest household debt report from the New York Federal Reserve shows U.S. student loan balances still enormous, with outstanding student debt in the trillions, and delinquency elevated after repayment reporting resumed. That does not mean every graduate is drowning. It means educational finance remains a major system-level burden in America in a way that is less common in many parts of Europe, especially where public tuition is low or heavily subsidized. And here is the nuance that usually gets lost. Europe is not automatically better for education. Some countries have limited slots in certain programs, high academic tracking pressure, or weaker pay afterward in some fields. America is not automatically worse. Many people use community college, scholarships, employer support, military routes, apprenticeships, or in-state public options to build excellent careers at far lower cost than the scary headlines suggest. The honest comparison is not free versus expensive. It is, what pathway is open to you, and what debt risk are you taking to get there? The ninth comparison is family life, leave, and the cost of being human when life gets messy. This is where policy design shows up fast. In the United States, the federal family and medical leave law provides eligible workers up to 12 weeks of unpaid, job-protected leave. The key word there is unpaid, and the other key word is eligible, because not every worker is covered the same way. That does not mean American families get no support. Some employers offer strong paid leave. Some states have paid family leave programs. Some workers negotiate flexible setups. But the baseline is patchier, and patchiness creates inequality. In Europe, the legal floors and family support structures differ by country, but many people experience a stronger default assumption that illness, childbirth, and caregiving are normal life events, not private financial emergencies to solve alone. That difference can matter more than salary when you are caring for children, aging parents, or your own health. This also connects to the culture of scheduling. In many American workplaces, flexibility can be amazing if your role is in demand and your manager supports it. In other roles, schedules can be unstable, and last-minute changes can wreck childcare, transit, sleep, and second jobs. Europe has its own scheduling problems in retail, hospitality, and shift work, but stronger labor rules in many countries can reduce some of the chaos. Again, not everywhere, but often enough that people feel it. The 10th comparison is inequality inside each system. This is the part that makes internet debates so messy, because two people can live in the same country and report completely different realities. In America, the top experience can be extraordinary. Big homes, strong pay, great healthcare networks, fast service, easy credit access, better schools in certain districts. A lot of life friction can disappear once you cross certain income and asset thresholds. The bottom and lower middle experience can be much harsher, with more exposure to debt, transportation risk, medical bills, unstable work hours, and housing strain. You can see pieces of this in the labor benefits data, where access to paid leave is dramatically lower for lower wage workers than for higher wage workers. And in household finance data showing many people cannot easily absorb even a relatively small emergency. That is why broad averages can make America look richer than it feels for many households. Europe also has inequality, and in some countries it is severe. Regional gaps can be huge. Youth unemployment can be a long-term problem in parts of the continent. Housing crises hit major cities hard. But one reason many people describe Europe as easier is that the floor can be less punishing in daily life, even if the ceiling is lower in some careers. That is not a moral statement. It is a system design statement. The 11th comparison is convenience, and this one sounds small until you live it. America is one of the most convenience-optimized places in the world. Long opening hours, huge choice, fast delivery, drive-through everything. Easy returns in many stores, financing options for almost anything. This can make life feel incredibly efficient, especially when you are busy and earning enough to pay for speed. But convenience in America is often a paid product, and the charges can hide in plain sight. Service fees, tips, subscriptions, premium versions, add-ons, parking charges, and finance costs can turn a cheap option into an expensive habit. People do not always notice because the costs are spread out across many transactions. In many European settings, convenience can be less extreme and things may move slower, but the price structure is often more visible and more standardized in everyday situations. That can feel frustrating or calming depending on your personality. A related point that causes constant confusion in travel videos is pricing psychology. In many European countries, consumption taxes are usually included in the displayed price, so the number you see is closer to the number you pay. In the United States, sales tax is often added at checkout, and tipping norms can add another layer in service settings. Neither system is inherently evil. They just train people differently. One feels cleaner at the moment of purchase. The other can feel more flexible, but also more mentally noisy. The 12th comparison is freedom, and this is the hardest one because people mean totally different things by that word. If by freedom you mean the chance to reinvent yourself, change jobs quickly, move across states, scale income fast, start over after failure, and pursue a high upside path, many people will say America is better. and for them that may be true. The system can reward risk and speed in a way that feels energizing. If by freedom you mean the ability to live a decent life without constant negotiation, to take time off without begging, to get sick without financial panic, to move around without owning a car, and to know the baseline rules are stronger than your employer's mood, many people will say Europe is better, and for them that may also be true. The system can reduce the price of ordinary human vulnerability. This is why the question stays hot. It is not only a comparison of places. It is a comparison of what kind of risk you want in your life. America often offers a higher upside and a harder fall. Much of Europe often offers a lower upside and a softer fall. Of course, there are exceptions. Some European countries combine high incomes with strong protections. Some American cities offer excellent public services and transit. Some places on both sides are struggling badly. But as a broad pattern, that trade-off explains a lot. Now, let us deal with a few common claims directly, because these claims spread fast and shape how people think. America is better because salaries are higher. Sometimes true, especially for certain fields and senior roles. But if you stop there, you are comparing income and ignoring system costs. Europe is better because healthcare is free. Not quite. Most systems are funded through taxes and contributions. And people still face trade-offs like wait times and country-specific limits. America is worse because there is no safety net. Too broad. There are safety nets, but they are more fragmented and uneven. Europe is socialist and poor. Also too broad. Europe includes some of the richest and most productive societies in the world, with very different policy mixes. America is impossible unless you are rich. Also too broad. Millions build solid lives there, but many do so by carefully managing risks that people in other systems face less directly. Another thing worth saying plainly is that culture can overpower policy in daily experience. If you value warmth, family proximity, public social life, walkable neighborhoods, and long meals, your answer may lean one way even if your spreadsheet leans the other. If you value scale, consumer choice, speed, suburban space, and entrepreneurial energy, your answer may lean the other way, even if your taxes are higher than expected. A system can look better on paper and still not fit your personality. And then there is immigration reality, which changes everything. Your visa status, work authorization, language skills, professional licensing, local network, and housing access can matter more than any average statistic. A person with a strong work visa and a high-demand skill in America may feel like they landed in opportunity. A person waiting on paperwork, paying high rent, and dealing with healthcare uncertainty may feel the opposite. In Europe, a person in a country with a strong labor market, good language integration, and stable housing might thrive, while another person in a weaker market can feel stuck. Averages cannot carry your legal situation. There is also a stage of life effect that people ignore. In your 20s, you may prefer America's upside, job switching, and bigger income jumps. In your 30s, housing and childcare may push you toward a place with stronger family supports. In your 40s and 50s, healthcare risk and burnout can become bigger than salary growth. In retirement, walkability, healthcare access, climate, and social ties may matter more than career opportunity. The same person can answer this question differently at different ages and still be consistent. Let me give you a simple decision frame that is more useful than arguing in comment sections. If your priority is maximum earnings potential, business opportunity, and the ability to scale income quickly, America often has the edge. If your priority is predictable costs, paid time off, baseline services, and lower exposure to private system shocks, many European countries often have the edge. If your priority is family support, healthcare peace of mind, and public transit, Europe may look better. If your priority is space, consumption variety, and flexible market options, America may look better. If your priority is a mix, then your answer is not America versus Europe. It is which American city versus which European country and city. And this is where the most honest answer lands. Life in America is not better than Europe in general. It is better for some people, in some places, under some conditions. Europe is not better than America in general either. It is better for some people, in some places, under some conditions. The mistake is asking a giant question and expecting a single winner without defining what you are trying to optimize. If we strip away the slogans and look at the facts, the pattern is pretty clear. America often wins on income upside, scale, consumer convenience, and room to run. Much of Europe often wins on legal time off, baseline protections, and reducing the cost of ordinary setbacks. America can feel amazing when your income is strong and your benefits are good. Europe can feel amazing when your priority is stability and time. America can feel brutal when one surprise bill knocks you off balance. Europe can feel frustrating when pay is lower, housing is tight, or bureaucracy slows everything down. Both stories are real. So the useful question is not which side is best. The useful question is, which trade-off fits the life I want right now? Do you want more upside? And are you willing to manage more risk? Do you want more predictability? And are you willing to accept less upside in some careers? Do you want space or do you want walkability? Do you want speed or do you want a stronger floor? That is the honest comparison. If this helped, like the video, and in the comments tell me your exact situation so we can make the comparison real. Are you choosing as a student, a single worker, a couple, a parent, or someone planning retirement, and what matters most to you? Income, healthcare, housing, time, or mobility? Share this with someone who keeps asking America or Europe like there is one answer, because now you can show them the trade-offs instead of the myths.